Welcome to this episode of First Takeouts, Bizcommunity soundbite-sized news to go, and the third episode of our e-commerce focus geared towards the launch of e-commerce day on the 10th of March 2021. I'm your host, Angie White, and I'm excited to introduce today's guest. Trevor Gosling is the CEO and co-founder of Lulalend, a South African FinTech company and online provider of business funding for SMEs and small businesses. He'll be sharing some insight into how the company addresses some of the traditional challenges that SMEs face when applying for funding, the pros and cons of running a digital lending business in South Africa, as well as advice for aspiring entrepreneurs. Welcome, Trevor.
Hi, Angie. Thanks for having me.
Thanks, Trevor. So to kick things off, can you chat about the traditional pain points experienced by SMEs in South Africa when seeking funding for their businesses and how you set out to address them through Lulalend?
Cool. Yeah. So I suppose the first thing and the biggest thing probably is that there's been limited options available to SMEs. So most businesses would turn to their bank for a solution to access funding, but unfortunately, the bank doesn't like risk. They don't like surprises. What a bank likes is sizable businesses that are predictable, that can offer collateral. And that's really what the bank wants, so that if they're lending out funds, they've got good security there and they know that they'll be able to recoup the monies that have gone out. So that's the first issue. There's limited options. The second is banks are slow. So, SMEs need quick turnaround time. They're not forecasting 6 months into the future. They don't have big finance teams that can assess what cash flow is going to look like in 9 months' time, whatever the case may be. And deals come up all the time. For instance, if you have to invest in stock and there's a stock deal available, you need quick access to those funds. So banks are notoriously slow, and SMEs need that quick, flexible access to cash. So those are the two biggest issues we've seen, and that's what essentially what Lulalend tried to solve for. So first and foremost, how do we get funding into the hands of SMEs? In a large part, that means we have to give funding on an unsecured basis. So, we're not looking for collateral or anything else to support the funding. Really, what we've built is the ability to really understand the true business health, we call it, through our credit modeling and underwriting processes to understand, what is the expected performance of the business. So that's solving the problem of just giving the money to the SMEs. But then the other big factor for us is the speed in which we're able to turn that around. So with our online approach, focus on automation allows us to give SMEs access to funding in near real time.
Awesome. So on that note, Trevor, seeing as though you are talking about solving these problems, what are some of the key challenges that you faced on your Lulalend business journey during the startup and scale-up phase, respectively? And how did you navigate these challenges?
Yes, I mean, ironically, access to funding was also the biggest thing for us. When we started this business, just over 5.5 years ago, there were no online SME funders available to SMEs. And obviously, it's a capital-intensive business. So when we approached funders with our idea of how we wanted to set up this company, we weren't greeted with completely open arms. So being a capital intensive business, we had to raise capital and had to find solutions to that, and eventually found ourselves searching offshore to global investors that had more experience in this type of lending. And they felt that South Africa had the right, the right market, the right opportunity for them to support our business. So that was the big first part, getting access to capital to be able to prove our business model. The next step was actually proving the business model. So we had spoken a big game of of what we're going to do, but now we actually had to do it. We had to start lending to SMEs and building the necessary scoring algorithms and utilizing the technologies like AI to be able to support that, and slowly develop the track record and understanding. So those are the two key areas in the early days that we had to solve for. And then subsequent to that, once we had those pieces in place, it's really been a focus on scaling the business, which we continue to do through digital marketing channels, partnerships. We look to partner with big business that have access to pools of SMEs, and I'll touch on that later. But that's really what's helped us distribute funding into the market, into SMEs.
Awesome. And what do you think are some of the pros and cons of operating in this digital lending business in South Africa currently?
Well, internally, looking at Lulalend internally as a business, being online or a digital lender has given us the ability to consistently innovate. Being a digital business, you're always able to quickly test, get very accurate measurements, and then decide whether you implement or pull back, and really get clear decisions that you work off that way. And then the beauty of running a technology business, and as you begin to scale it, is the ability to keep operational costs low. So, if you're running a true technology business, that's ultimately what you're able to achieve. At scale, you're still able to reduce operational costs versus a more traditional business where they would have to, increase operational costing because it's pretty analog and you need a resource for it and all that sort of thing. So that's more internally for us. The other pros externally for our customers is, it's a quick, easy process, no branch visits. So, during a time like COVID, perfect timing for businesses to be able to leverage the fact that they don't have to visit or meet in person to be able to access that this type of funding. And the ability for customers to get it as soon as they need it. So not waiting forever or submitting manual applications that then take a lot of time. On the negative side or the con side, internally, if we look at how we set up the business, it was an expensive operation, particularly in the early days to set up. We're different to e-commerce where you can leverage a number of platforms that are available in the market at this point in time. But, a lot of it was built in-house, and that has its capital cost that we had to support. And then, for our customers and for South Africa and the environment we in, there's always that trust issue that we sort of lagged the world by a number of years as consumers, both SME and customers themselves, have to get over trust issues and dealing online and that sort of thing. And really in the SME space, a lot of business owners, particularly the more mature ones, are more used to that face-to-face interaction, and that's how business deals are done. And now all of a sudden it's online, and we've tried to mitigate those risks by being available on the phone for any questions and help provide the comfort and clarity that customers need there.
Yeah, definitely can understand that point. But Trevor, the pandemic, as you mentioned, has led to somewhat of a growth spurt in the e-commerce industry locally. Do you feel that the digital financial service providers are benefiting from this increase in e-commerce adoption? And how can adoption in the space be accelerated further?
Yeah, so, personally, we've definitely seen a lot of it. So as an example, we're the funding partner to Takealot for their seller marketplace. And it's, very clear and evident how sales volumes have picked up across marketplace sellers. With increased sales, there's increased appetite for needing additional stock and that sort of thing. And we've been able to increase our exposure to those customers and gain additional customers. And then I suppose the beauty of an e-commerce company is the fact that, you're already online, you're already digital, you're more inclined to look for online funding because that's the case. You sort of crossed over that trust issue. So, that's essentially how we started the business 5 years ago, was with an online payment gateway, because we knew that was the thinking. So if you're an e-commerce business in South Africa, there are, quite a few alternatives at this point in time for you to access cash to help you to scale.
Good to know, definitely. And then also, do you feel that the e-commerce landscape in South Africa is a level playing field for both small and large businesses? And how do you think smaller businesses can benefit from or capitalize on the recent e-commerce boom we've witnessed?
Cool. So I think first and foremost, e-commerce has become far easier for small businesses. There's no need, as I mentioned a little earlier, for that big capital outlay. You can leverage platforms like Shopify, WooCommerce, whatever the case may be, is, if I think back to 2012 when I started my first e-commerce company, it was a very different landscape. It was, a lot harder trying to orchestrate the setup of an e-commerce business versus, now it's in a couple of weeks, plug and play thing that you can get up and running. So I think small businesses that really can really benefit from that. But in terms of the playing field, I think there's really space for both to operate effectively, both big and small. For small businesses, it's all about being strong in their verticals to remain successful. So, your general retailers like Takealot, Woolies, whoever, the big guys going online, they're going to keep the digital footprint. They got the budget, they got the money. And it's going to be difficult to compete with them on speed. Looking at Takealot's acquisition of Mr. D a while back and how that's, really distribution's been such a big part of e-commerce and how they've been able to leverage that and being as effective as possible. So it's difficult to compete in those areas. But, from shoe sales to wine sales, whatever the case may be, is if you can provide, the slickest experience, build a strong community, generate real customer value, then ultimately, you're still going to win. You're still going to get the traffic. And then I've touched on Takealot a few times here, but there's also the opportunity to leverage the marketplace that Takealot offers. So put your product on there, see how effective it is. In the US, we've seen a lot of VC investment into companies that are effectively leveraging the Amazon marketplace, and it just shows that that's becoming a very real thing and a real growth area. So definitely an opportunity for business owners to test. And if you want to increase your digital footprint, you still want to have your own brand, leverage a marketplace or whatever's out there, but at the same time you can continue to build your direct brand to market.
Definitely. And I mean, that's a theme that we're seeing coming through more and more these days, is that of collaboration. So 100% agree with you there. Also, Trevor, over the last year, many businesses have needed to make their long-term overdue shift into the online space. And obviously, I'm sure this will continue. To make this transition to online, many SMEs may require additional funding. What groundwork do you think should be done before applying for funding? And do you have any tips for managing cash flow during periods of expansion?
Cool. Yes. Important for any business owner to know that there's not a one-size-fits-all solution. And I think the biggest thing is understanding where your market is, where your customer is. Will they look for your product online? Are they already online? Has 20-30% of your customer base shifted to shopping for your products online? Because that really dictates how hard you need to go at it, what sort of investments you need to put into the opportunity. If 20% of your business is now online, you better make sure that at least 20% of your capex, whatever you're investing into your business, needs to sit into developing an online solution. And we get asked, how do you do that? How do you understand exactly where your customer is? And there's a lot of opportunities or ways to go about it, but just doing like quick surveys, using Google Forms. If you operate in a storefront already, just doing some in-store questions and really get to understand your customer. The better you understand your customer, the better you're able to grow your business, but understand where they are, where they're shopping. So once you got that, it's and you see where the opportunity is, or is online e-commerce where you need to be. If that is the case, then you need to make that happen. And I think once you've got you've had that sort of light bulb moment, it's then researching and understanding exactly what it means to go online, and making sure, particularly in the early days, keeping your costs as lean as possible, not being too aggressive too soon, but being lean on costs, but getting something out there and then slowly developing off the back of that. Once you see traction, start getting a bit more active. So I'd encourage any business owner that knows that they need to be or offer an e-commerce solution to their business, develop a 6-month cost estimate, understand what the funds you need, utilize lenders like Lulalend to ease the cash flow burden, access cash that you can repay over 6, 9, 12 months. Don't use all your cash up front and then you can't invest in stock and all those sorts of things that are necessary. So get an accurate ballpark estimates, and then try to fund that over a 6, 9, 12-month period, whatever makes sense to your company.
Great advice there, Trevor. How about we talk a bit more about online customer experience? Which aspects of the customer experience has Lulalend prioritized to ensure simple and streamlined application and support processes?
So application UX flow for us, we've had to, really bed it down, make sure it's completely seamless, intuitive for a customer. Turnaround time for us in terms of making decisions on loan, as I said, real time in most instances. So it's all about speed, no paperwork, and then implementing, for us on our side, something we really had to think about, doing away with paperwork, doing away with customers having to think too much. We, one of the earlier, solutions we proposed was giving customers the ability to actually just link in their bank accounts or link in their online accounting platform, so that they didn't have to search for statements and all that sort of thing, and they can provide us with their transactional data. Very quick process that, within a couple of minutes, you've done an application and we're able to assess and approve you from there. So that was really important for us, solving for speed, not in terms of only turnaround, but actually that application process. For us, it's all about time for a business owner. So if we can save a business owner time so they can get back to doing what they really enjoy, trying to raise finance isn't why most business owners get into business. So if you're able to give them time back and give them an answer really quickly and give them access to the funding as soon as possible, it takes away that stress, that burden, gives them that time. And then as we've thought about the customer experience and as we've tested and looked at ways to improve and take away friction, we found that strategically implementing chatbots or FAQs through the application process or journey on our site reduces drop-off. It helps with customer understanding, removes unnecessary calls. That's been a big focus for us. And then massive to our business is repeat clients. So making sure that, first time you've had a good application experience, but making sure that, when you need access to funding again, we're able to leverage everything we know about you. We've really already developed this online relationship. The platform recognizes, knows who you are, and we're able to turn around funding as quickly and making sure that you leave us completely satisfied.
Couldn't agree with you more. Simplicity, definitely key. Talking about simplicity, which technologies do you feel have the greatest impact on the local fintech space will have the greatest impact on the local fintech space over the next decade?
Yeah, so I suppose a decade is a long time. I think we're going to see, a lot of movement. A lot of things are going to happen. I think, we know
especially
enough about,
now,
or we've heard enough. Yeah, exactly. And first and foremost, Bitcoin and blockchain, the technologies that's being developed there, which is still ultimately in its infancy, is over the next decade only going to have more and more of an impact. Closer to our space, open banking, we believe, is a big opportunity. It's maybe a bit more down the line in the likes of the US or UK, more developed markets, but it's something that, gives customers of a bank the ability to, really own their transactional data and use it as they see fit, which then, opens a myriad of opportunities for the customer and business models to work off the back of that. And then I suppose in the consumer and SME space, the continued development of AI. So not just for better underwriting, but really to help and guide improve spending and savings, giving businesses a better understanding of their company, how they can generate more cash, how they need to be thinking about saving or the next marketing campaign, where they should be spending to make their company as effective as possible. I think for me, those are the three areas. Maybe I'm a bit biased to a couple because they're closer to my space, but that's where we see, over the next while, there's going to be a big impact.
Definitely going to be interesting to watch how things unfold, for sure. And then finally, Trevor, is there any sage advice you can offer aspiring entrepreneurs wanting to launch an online business?
I think I mentioned a couple of them. So, I mean, do your proper research, the product market fit, and understanding where your customer is, understanding setup costs, what you're in for, that sort of thing. Leveraging the platforms that are available when you're thinking about building in-house. Really, that's to generate your own IP. If you can leverage something that's in the market, it's probably pretty cost effective. Go that route. But I think one of the biggest things I learned very early on and continue to understand today is really understanding digital marketing, and understanding there's no silver bullet to being successful in that space. It takes a lot of work, a lot of efforts. Again, a lot comes down to understanding your customer and where they are and where they're searching for you, and making sure that you're super effective in those channels. And very quickly understanding where is wasted spend, where are acquisition costs high, where you're not bringing in your best customers, and moving away from those channels and really focusing on the areas where you're getting good quality customers at a good acquisition cost, and making sure that you're as strong as possible there and ahead of your competitors at all time. That's a big focus.
Once again, great advice. Thanks so much, Trevor. That's a wrap on today's show, with a reminder to watch the space for more e-commerce related news with the launch of E-commerce Day on the 10th of March 2021. It's Biz Takeouts. Take it where you like it, when you like it. Until next time.